traders say today's Treasury bills primary market auction is expected to take center stage, and they expect a bullish outcome at the end of today as the excess liquidity will drive market activity. And I have Ladi Belo, is a fixed income dealer at Access Bank. He joins me for a focus on the fixed income and FX markets here in Nigeria. Thank you for your time, Ladi. And let's look at how the market has been and what's your take on the PMA?
Hi, good afternoon. Thank you very much for having me. Well, the market has been generally quiet, given the suppressed or the depressed yields in the market at the moment, especially on the OMO curve, as well. This is skewed towards the long end of the curve. That's the 2049 and 2050 bond. But because of the high levels of liquidity in the system that we've witnessed opening the week, we're still seeing some demand, especially around the medium and long-tenured OMO bills. This remains largely client-driven, but we see some cares on the medium and long-tenured NTD maturities, especially now that rates have become very close. We're seeing the rates converge between the NTB and the OMO space of recent. Yes, like you said, we have an NTB auction that was scheduled for this morning. We have about 4.4 billion on the 91-day, 14 billion on the 182-day, and then about the 364-day, and that's the new one-year maturity being rolled over by the DMO. Given the attractiveness of the NTB maturities over the last couple of trading sessions, we expect the yields, especially on the one-year maturity, to drop. It may still be maintained around the 3% handle, but we definitely expect the yields to come down from the 3.34% where it closed at the preceding auction, simply because the amount on offer now is reduced, and especially as rates, the OMO rates during the week have come down significantly. Now there's no rate, there's no treasury bill in the market, there's no OMO maturity in the market that's giving you a rate of significantly above 3% right now. So we expect to see more demand filtering to the primary market space.
Fine, but on the currency side, though, with the resumption of sales of FX to the Bureau d'Echange operators, how do you see this impacting the market going forward still?
Well, rates in the INE space have remained stable at around 386% levels. CBN last week commenced its intervention in the INE markets. $1 billion. So yesterday, rates in the INE window closed around 386. They've resumed sales to BDC, 10,000 USD per auction, and this is predominantly on Mondays and Wednesdays. The INE run around. So what we expect to see in the short to medium term is an appreciation in the rates, in Naira rates. Well, this is expected simply because most of the obligations that are outstanding are being cleared. To see a bit more liquidity in the market and an appreciation in the rates in the market.